Welcome to the InsideTechnician.com. Today's December 22nd, 2010, and the symbol that you're viewing today is ARP for American Reprographics Company. This is the most recent profitable trade to date that I've taken, a 3-day hold time that brought me in 2.7%. Today I'd like to talk a little bit about how I calculate my risk to reward ratio as it compares to the swing trading methodology that I use here on the Inside Technician, entitled 4 Steps to the Beach. Now let's go back and take a look at this previous pivot point level right here at about 775 as it compares to what was the most recent low here at this price level. Now anytime I get into a trade, hypothetically speaking, if I know I'm going to risk $1,000, I need to make $3,000 on a trade, or I can't take the trade. The ratio has to be 3 to 1 or greater. Now in this case, using the swing trading methodology that we use, we always have a previous price level to measure that to. So in this case, I got in this trade right here at 706 with an initial protective stop right here at 684. The difference being 22 cents was the risk. Now the difference between where I got in at 706 and 775, which was 100% retracement on this trade, is 69 cents. So in this case, to calculate it, we simply divide 69 cents by 22 cents, and now we have a 3 to 1 risk to reward ratio on the trade, signaling a go. Now, additionally, what I always do is overlay Fibonacci retracements connecting this day with my secondary data point here. And this also allows me to be able to get out a little bit early if I need to, in case the market has topped out or there's a correction that's coming into play. In this case, I got in here again at this level at 706, and I actually got out at this level right here at about 726, just short of a 50% retracement at 729. Now the reason why I did that was because on an intraday basis, it got to this level and it stalled out. Now with the market not being at this moment in time in a serious uptrend on this day's price action, I decided, as always, from a business trading standpoint, to get out with profit, book the trade, and trade another day when another high probability trade comes across my radar screen. So I want to thank you for being with us again. This is Jeff Killian for the InsideTechnician.com. Every week on my weekly webinar, you get a chance to see exactly, in a fully transparent manner, how I do what I do and how we incorporate the market call into our single stock selection process. We'll see you next week, live in person on the Inside Market Analysis.